We are here at the launch of Motilal Oswal BSE 1000 Index Fund, and we are joined by Pratik Oswal, who's the head of Motilal Oswal Mutual Fund. Thank you for joining us, Pratik.
Thank you for having me.
Pratik, what's the rationale of launching a fund in this space? As markets are also overvalued at this point of time.
Yeah, so I think the rationale obviously is to, so we want to launch funds that we think people can invest for 5, 10, 15 years. So we would never look at market levels before launching any fund. I think the idea is to really see investing as a journey as opposed to investing in now versus 6 months later. So we believe that, in fact, markets are now, I feel, close to long-term averages, I would say, so not too expensive. But we do believe that, I think investors who are able to continuously participate in equity markets across cycles will do extremely well in their investments. And we think that the broad market fund, where you're getting access to most of India's equity in a single fund, will benefit the most as India is growing over the next 10, 15 years time.
What sort of return expectations can the investors keep from this index fund? Because there's one more, I think the 500 index fund, which is in the similar category. So, what can investors expect?
Yeah, so in terms of expectations, I think investors can expect, broadly, 1 to 2% more than what they can make over, say, a Nifty 50 over, say, a 5 year period, 5 year plus period. So I think that's reasonable expectations to have, because this fund is a fund where you're getting access to mid caps, small caps, and micro caps. So I think that's a fair expectation to have for anyone looking at long term investing.
So, could you give us a number which?
Yeah, so I mean, I can't really predict what Nifty will do, but historically Nifty has done about 12 to 14%. So I think just add maybe 1 or 2% on top of that, and that's a reasonable expectation to have for any investor looking at this fund.
Alright. And as you mentioned that there's allocation of small and micro caps also. So, what sort of liquidity? Because liquidity could be an issue because this small and mid cap space can see some sort of volatility.
Yeah, it's a very good question. So, I think the one thing that has surprised us in the last 5 years is the explosion in liquidity in microcaps. So an average microcap, so the microcap segment liquidity has increased 13-fold in the last 5 years' time, and also the average market cap has improved 6.5 times. So companies are much bigger. An average microcap company today is 4,500 crore. So essentially, we are not really concerned about liquidity. The second is that the allocation to microcaps in this specific fund is about 5 to 6%, which I think is a very small number. Still, even though it's a 1,000 stock fund, it's primarily a large cap fund where 60% of your money will be in large cap stocks. So I think the allocation to microcaps is small. Second is, microcap liquidity has exploded over the last, 5 years. And third is, see, suppose we have a 5,000 crore fund, which we don't expect to have over the next couple of years. The allocation to microcaps is like less than 250 crores. So it's reasonably manageable. We can scale it how much ever we want to. So we don't think liquidity is an issue.
Which are some of the sectors in this space, in the small and the micro cap, which you're seeing are picking up and could have potential to be invested in?
Yeah, so what's interesting is that in India, if you look at all the caps, large cap, mid cap, small cap, micro cap, and if you look at the sector profile, they're all different. So large caps will be, say, IT and financial services heavy. A mid cap will be, say, minerals and something else heavy. Small caps, so I think micro caps are IT, hardware. So the sort of diversification that an investor can have just by having an exposure in all these 4, 5 caps is actually quite high. So we believe that current flavor is, I think, IT, hardware, and something else, but it'll change. It keeps changing because the good companies get progressed. They get upgraded to small caps, and the bad companies get downgraded. So we believe that this sector profile is something which keeps evolving in India. We want to give access to the market. So whatever is the best performing segment will be in your portfolio, and whichever sector is not performing will automatically be downgraded over time. So I think it's an evolving process. If you look at Nifty, say 20 years back, Nifty was mostly infrastructure, power, oil and gas. Today it's financial services, IT. Tomorrow it might change. The beauty about buying index is that you're always buying the best sectors at all times, because you are essentially investing in the top 500, top 1,000, top 50 stocks.
So, as you said that there's more allocation to the large cap funds. So, do you see that allocation changing? As you said that small and micro caps are evolving by each day.
Yeah, so we expect the large cap allocation to reduce, to decrease over time. It's currently 60%, and we believe that will come down, say 55, maybe 50% over the next, say 5 to 7 years time, as the lower segments like micro cap, mid cap, small cap are growing at a much faster rate. So that's what's going to happen. We have a top 500 fund as well. You talked about earlier. So there, when we launched the fund, it was 75-80% large caps. That has come down to 65%. So I think investors can expect the allocation towards to slightly shift from large caps towards mid small caps over the next 5 to 10 years time. It'll happen in a subtle way, obviously, but that is what we expect as well.
All right. Thank you so much. Thank you.
If you like the video, do like, comment, share and subscribe. If you like the video, do like, comment, share and subscribe.